will be going on for about 30-35 minutes today. That's the intent. With that, let's get right down to it. So the agenda for the day today is we'll talk about the sales tax service and the way it's configured, and we'll walk through some of that. We'll walk through a couple of common scenarios that we've seen people would like to set up, the way sales tax needs to be set up, and then followed by any Q&A on this topic. For those that have already installed Work 365 version 2.5, you would see a new taxation menu show up. There are 5 different entities that have been created in Work 365 to support taxation. There's tax services, tax categories, rate groups, breakups, and countries. We'll get into each of these when we do the demo, and I'll explain what those are. But just watch out for these. We'll be talking about these extensively. There is some additional parlance that has come into Work 365, and as we talk more and more, I guess I'm hoping that this will become a lot more clear in terms of what they mean, and everyone becomes comfortable with these words and these terminologies going forward. So the way sales tax is structured in Work 365, we offer a rate-based tax calculation service. So you can define your rates in the system, the different tax rates that apply. They can be composite rates, which means that a rate can have multiple rates associated with it, and you could be a collection of rates, or it could be a single rate. Both scenarios are supported. You could have product-based rate calculation. So you could say, you know what, I have certain products, and these products are taxable at this rate, and these group of products are taxable at this rate. That's one way to do it. The other way is, it doesn't matter what the products are, I have to pay a flat 20%. For example, UK has VAT, and my understanding is that it's 20% across the board. So that is supported. Like I said, the individual product based, like they operate in India and some of the regions, that's supported. Or in the US, where you have one tax rate that gets applied to the entire invoice, and certain items can be taxable or non-taxable in that invoice. Those 3 scenarios are supported. So when I say 2 modes of calculation, these 3 scenarios are covered by these 2 different modes. One is where you calculate the rates based on the invoice itself, and the other is that you actually calculate the rates based on the individual line items. Each one of them can have a different rate. This supports multiple locations. You can set up a default configuration via the user interface and override this at the billing contract level. So you have flexibility where you say, you know what, I want everyone to have this sort of taxation applied, but then there is this one customer that needs to be treated differently, so you can override that at that specific billing contract. As always, this is the first iteration of this feature, so feedback and comments are appreciated and welcome. So with that, we talked about the 3 scenarios. I'll jump right into it. But again, just to reiterate, we're going to cover 3 scenarios. The 3rd scenario we'll cover if we have time. But I think my gut tells me that we'll probably only be able to cover the first 2 scenarios. So with that, if there are any questions, just again, just feel free to ask. And then we'll get them answered time permittingly within the while we're doing the conversation, or we'll look at this at the end. Okay, so just to reiterate,
before we actually jump in, maybe I'll just kind of read the questions as they come in. We do have one question: can all of this be configured in QuickBooks on-prem instead of Work 365? So I think it's a QuickBooks integration question.
So when you configure taxation and Work 365, it gets carried over to QuickBooks. But what happens is you can definitely configure this in QuickBooks, and but then you would have a difference of invoices. Your invoice in Work 365 would say, let's say X dollars, and QuickBooks would say X plus 10 because you've got to apply taxes. A lot of our customers are actually sending invoices write from Works 365 and they want to have the full invoice, which is why we built this feature into Works 365. It carries over to QuickBooks Online, by the way. So if you set up, and we'll cover that as well, that the way you set up taxes, how do you configure it so that it carries over to QuickBooks Online and you see both the numbers match in QuickBooks Online as well as in Works 365. So we will talk about that a little bit. All right. With that, yes, was there any other questions, Samantha?
No, that's it so far. Thank you.
Okay, no problems. I think from a presentation perspective, that's all I had. Let's get right down into it. So we talked about the Works 365 entities and the menus. I'm just going to give you a quick glance of what we have here. Just 1 second. So if you can see, we've got this taxation menu, and we talked about the different entities that are showing up. They're here. So let's walk through this. A tax service is really a tax configuration. It's the way you're going to set up tax and the way you're going to apply tax. Think of a tax service in that respect, right? And let's have a look at that. I'm going to go ahead and create a new one just for our demo. So we have two types of tax calculations services. One is a no tax calculation, which means that this doesn't actually do any tax calculation. This is required, let's say, for example, when you have set up a global tax service to do tax calculations for everyone, but for one customer, you don't want to calculate any tax and you want to override that. So in this case, you can create another tax service called no tax service and apply it to that specific billing contract, and then that billing contract would not calculate any tax services at all. So again, and then the rate-based tax service is what we've got. So if I select a no tax calculation, really there's nothing else to fill in. You can just go ahead and hit enter a name and hit save, and that's pretty much it. There's no other configuration required here. However, if you do select a rate-based tax service, at this point, you are required to enter some information here. To start with, a name for this where you can easily identify this tax service. So let's call it the service. You can go ahead and create an address here. So first, after you've created this, we recommend saving this record so that the rest of the information can be filled in. Once I've created this, I've saved it. The primary address is what can be populated. I'm going to create a new primary address. Let's assume that the organization that we're with is in the United States. So I'm going to say US primary address, just a friendly name for the address. Fill in some details here. And with that, I have configured the address on this. I'm going to ignore the write-in tax category in the default tax category. This will apply when you're working with scenario number 2 or scenario number 3. But for the first one, where you're going to apply a standard rate for each based on each customer, this will not apply for us right now. So I'm not going to touch that. I'm going to go ahead and then scroll down to the additional property screen where I see some more properties here. The first one says whether you want to calculate tax based on the shipping address on the invoice or the billing address. Depending on where I am, the tax rules may be different. So I can select, for example, billing address, some rounding information to actually control the precision. This is an interesting one. So this is what controls how the taxation is applied. If I say yes, which I will use for this demo, it will apply the tax based on the rate I specify on the billing contract level. It will not consider product level taxation. So yes over here means use the tax applied at the billing contract level and tax all the items in the billing contract at the same rate. Now, okay, so that's really it. And then the the last option says apply tax to overseas transactions. So if your customer's country is different from your country, how do I treat this situation? Do I calculate tax as if it was normal, as if it was regular, or I shouldn't calculate tax? So in this case, I'm going to say apply tax to overseas transaction as no. With that, I have set up the way the tax service needs to behave. I'm going to go ahead and click save. All right. Let's go back and make sure that that's set up correctly. Yep, all that looks good. So we've set up this tax service. I want to make this tax service now the default tax service for everything that I do. So the best way to do that is go into Work 365 configuration. Oops, sorry. And you'll notice something that says default tax service. So if I look at that, that'll give me the Worksphere training demo tax service as the default tax service. I can just go ahead and select and save that. For now, I'm going to say no tax calculation, and we'll look at how we can override this. So just go ahead and save that. Now, the next thing that we want to look at, so we've configured the way a tax needs to be calculated. We need to set up the rates that a tax service will use. So we're going to look at tax rate groups. Tax categories, again, used when you want to do product level tax calculation. But since we're looking at this from a full invoicing perspective, we'll focus on the tax rate groups. So a tax rate group is a collection of tax rates. It's as simple as that. So I'm going to go ahead and say, Virginia tax, for example, and I'm going to use fictional rates and taxes. So please don't mind, I'm not an accountant, so I don't have full visibility in what actual tax rates are. So excuse me for that. So I've created a tax rate group called Virginia tax. I'm going to go ahead and apply. Let's assume that this has 3 different tax rates underneath it. So we're going to say state tax, let's call it VA state tax, and let's assume that's 5%. Let's assume there's another tax here called I don't know, Fairfax county tax, and let's say that was another 4.5%. And I can add, if there were additional taxes, I would add that. And I'll call it Virginia tax 1 because I could create additional tax groups. Let's say there was another situation where I would have not only the state tax and the Fairfax county tax, but also let's say a Reston city tax, in which case I could create a Virginia tax rate 2 with that additional tax rate in there as well. So I have the flexibility in terms of configuring what tax combinations I have, and I can apply that to different places. So with that, I've created my tax rates. I've created my the tax rate group. Just a side note, this may not apply to a lot of people, but I'll let you know. The levels is there when you want to calculate tax on tax. So if there are situations like this where, for example, you want to calculate 5% of tax and the next 2% is actually calculated on the 5% rather than the whole amount, then this is what you'd use. So just to keep that in mind, it's tax on tax as opposed to so if you have levels 2, 3, or 4, then they will calculate tax recursively on the previously calculated levels. So just to keep that in mind, I think for most people, the level could just be defaulted to 1 and we should be fine. All right, with that, so I just want to pause here for a second. Any questions?
Not so far. Nope. I think we're good.
Okay, awesome. So, all right, moving on. Now that we've set up the tax service and we've set up our rate groups, we're going to go ahead back to a more familiar territory, the billing contract. And I was looking at, let's say, datum. Let's open up datum. Now, one thing that you have to understand before you start using the taxation service is your customers' addresses have to be set up right. If they're not set up right, the taxation calculation will fail because it won't be able to determine whether how the tax should be calculated, because we use address as a means to understand how the customer's tax position is, how the customer is related to you from a taxation perspective. So the way to do that is to make sure that all your customers, there is an excuse me, there is an address field here. Just make sure that all your customers have the right addresses populated, the city, country. What we're more concerned about is the state and the country. They need to match a state and a country that we've defined or within the taxation system. And I can, you know, maybe this is a good segue to talk about that a little bit. But we have a country list which is pretty comprehensive. That country has a name. Let's have a quick look at that. I'm going to just duplicate this tab so we don't lose context. So if you see, there's a country's entity here. And if I look at United States as an example, you'll notice the name of the country is US. There's an alpha 2 code, which is the standard code, which is US. And there are a different set of aliases. So if you notice here, my country here was called U.S. I can put that as an alias here to say, and then even if I put U.S. the system will recognize it. So if you have different aliases or different names for your country and you can't control that because this is CRM functionality, we've given a way to get around that. So now if I put in United States of America, U.S.A, USA, either of those combinations, then or United States or US, then it will recognize this as the United States. So just to keep that in mind. And each country has multiple states. So if I look at, for example, Alabama, then you would have the same concept where you have a name, you have an alias, and you have a short code. So if people are spelling this in different ways and you find that it's hard, this constantly fails because people keep setting it up differently, you could set up different aliases here to make that happen. So again, going back to what we were talking about, the address is very important, especially the state and the country. They need to be populated for taxation to work correctly. So before you start implementing this data needs to be reviewed and make sure that it's correct and up to date. All right, so moving back to our billing contract. We have the billing contract here. So how do I make sure the taxes will now be calculated? Remember, our global setting that we applied was the no tax calculation. So it's not going to calculate tax right now if I generate an invoice. So what do I have to do to override this is to scroll down and you will notice there's a tax service here. So I'm going to go ahead and select our demo tax service. And remember when I said apply rates directly, and we set that as yes, what that meant was we had to select a rate group at the billing contract level. So that's what we do here. And just to make it easy, because I have multiple different rates in different countries, I want the US, so I can just put US here. Sorry, that didn't work. Okay. So I put
Did you start with Virginia? Yeah.
Yep, I think I did. Okay, so there it is, Virginia tax 1. So I select Virginia tax 1 and I save this. And now this billing contract is set to calculate tax based on the Virginia taxation service. So I'm going to go ahead and
actually, really quick, Yusuf, before you move to the invoice, right. I noticed on the account form that this this account is actually set for Washington, not Virginia. So going back to what you said about data being accurate.
So, I mean, that honestly, that depends on the nexus you have, right? What rate applies here is up to you to set up. The customer can be when you set up the rates, you're deciding on how the tax is applied. So the customer could be in Washington, but you may still have taxation that applies to you in Virginia. So you would still put Virginia here, right?
Got it.
That's more of an accounting setup question. I know this is a little bit fictional because, like I said, I'm not an accountant. I just need to make sure that we're doing this more of a product demo. I don't guarantee the accuracy of the tax calculation. It's the actual scenario itself, because I don't know the tax rules, but this is how the system behaves. But yeah, you're right. It could be maybe we need to change that to Virginia, but either way, it would work. All right.
Yep. I just wanted to clarify that. Thank you.
No worries. Okay, so I'm going to go ahead and generate an invoice, at which point you're greeted with a very familiar screen. I'm going to go ahead and say proceed. There's nothing else that needs to be done, because the taxation calculation is injected. Once you've configured tax, the taxation calculation is actually injected into the invoice process itself. So whether you generate the invoice from here manually or the invoice is generated automatically, the tax will be calculated. So let's go ahead and have a look at what we have here. And just want to refresh that. And the July tax invoice that we had that was just generated, it was, you can see the date on that, it was just right now. Okay. And I'm going to scroll down here. And you'll notice that there's a total tax calculation of 50.82. Now, how did I come up with that? If you clicked on any one of these line items, you would see that this item had $9.5 dollars of tax. If you remember, we had two rates applied, 5 and 4.5, so a total of 9.5%. This item was $100 amount, so there were a 9.5% of that was $9.5. The other thing to note is that there is now a new form for this for the invoice line item. So if I look at that form, then what I see here is this was the subscription to which this line item was attached, and whether this item is taxable or not, yes or no. And this is something that gets set automatically when the item is when the invoice is created, right? Another thing to note is that now that you've got your total taxation shown here, this is on the invoice, and each line item has its individual contribution. That's all that is available to you within the line item. But the other thing to note is, from a reporting perspective, you will notice another entity here called tax breakup. So I'm going to go ahead and click on that. And what that shows me, sorry, I'm going to just reduce the screen size a little bit, hopefully. Yeah. Hopefully this is, everyone can still see this, right?
Yep, we're good.
Okay. So if you remember, we had two taxes that we calculated. So the system is telling me now that based on what I had entered, I owe Fairfax County $24.07 and to VA State $26.75. And I can look at this from a total. This is just for that invoice, but if I go into the taxation entity here, which is tax breakup, then I can get the same view at an overall perspective. So as you can see, I've got VA state tax, Fairfax County, California state. This is from another invoice calculation, but I get all my tax liabilities shown in one place. So that's the other thing to note. Any questions so far before I move forward?
Nope, we're good.
Okay, awesome. This is the way I believe most companies in the US do the taxation. Now, one of the early feedbacks we got was that, hey, this is good, but I have situations where I apply a tax to an entire invoice, but I might have certain subscriptions, or like, for example, services which are non-taxable. So how do I enable that? So when you go to a billing contract, and we've set up, I'm going to go back to our demo billing contract datum, and we've applied this tax group here called Virginia Tax 1, which is, you know, a total of 9.5%, and it's going to calculate taxes on all the subscription item. But let's say I'm going to go ahead and let's pick one here. I'm just going to say that this one here, for whatever reason, is non-taxable, right? So I can just scroll down here and I'll see an is taxable field. I'm going to set this to no. So, and at this point, this item will no longer be taxed. Something to note, if you remember, this field when I came into the form was blank. This would be the case for new subscriptions, or rather old subscriptions. Existing subscriptions, when you upgrade to 2.5, will not have a field specified. This field would be blank. We assume a blank field is taxable. So if you want a field not to be taxable, you have to go and set it to no. Otherwise, it will be treated as taxable. So a yes field here or a blank field is considered as taxable. So just to keep that in mind, if you want to set up something, you have to explicitly go ahead and say no. And this is what drives that other line item. So let's look at, I'm going to go ahead and save this, and we see what effects this has on the invoice. I'm going to go ahead and generate another invoice for this. And this one we'll do for August. Okay. And very quickly. So this is the invoice that was just generated. Let's have a look at that. If you notice, the earlier invoice was 58 odd dollars. This is 41. I'm going to go ahead and look at the Dynamics 365 for Team, which is the one that we had selected. We go ahead and have a look at this, and this says that this is non-taxable and there was no tax calculated on this. So that covers the taxation configuration and setup when you have to apply a single rate per invoice and not have to worry about individual line items. So that's a fairly standard, fairly simple way to set this up. You could create different rates in the system and apply a different rate to each billing contract depending on where the customer is located, depending on that specific tax nexus or jurisdiction, and that you could just all right. So that was scenario one. I'm going to go back to our presentation. This is what we call scenario one, where the rates were based on the customer location, example US. Now, before I move ahead to scenario two, I know we are a little bit close to the conclusion of this webinar, but this is, second one's a little bit easier, and the third one I think we'll have to do another session in the interest of time. All right, so if there are any questions, I'll take them now on scenario one. Otherwise, I can go ahead with scenario two.
Going back to that first question, I think the question is really just how the taxes, once they're set up in Work 365, how it's going to look on the QuickBooks side of things. But okay, maybe, I don't know if you want to do that now or at the very end.
So let's talk about that. Okay, so that's actually a good point. Yep. Let's do this. What I'm going to do is, rather than get into scenario two and sort of have that create a new scenario, let's talk about a little bit about how this would integrate with QuickBooks, right? So I'm going to go ahead and try and get into QuickBooks. Just 1 second. Actually, I'm on a different machine. I don't have access right now. Just 1 second, please. Okay, so let me do this. In QuickBooks, you can set up your own tax rates. So if you go to taxes in QuickBooks, and then you would see an option to say add edit tax rates. Those tax rates, the name of those tax rates and the value of the tax rates have to map to what you specify in your tax rate groups. So when I specified a tax rate called Virginia tax rate 1, I would go into QuickBooks and create a tax rate with the same name and with the same breakup, because even QuickBooks allows you to create taxes as composite tax rates. So I would create the same structure in QuickBooks, and when I apply this invoice, it will automatically apply that rate in QuickBooks as well. So you would see the same numbers on both sides. When I set up an item as non-taxable, it will get carried over to QuickBooks as non-taxable. So QuickBooks will, the integration with QuickBooks will follow whatever you declare in Works 365. It will follow that information and post that same information into QuickBooks. So all you have to do to carry this information over is to make sure that your tax rate groups match with the tax rates that you create in QuickBooks. That's it. Is everyone clear on that?
I'm not seeing any questions, so I think so. Yep. If you're not able to access it, did you want me to try and log in and we can switch to my screen, or do you think?
Yeah, if you can, that might help. That might help.
Okay, give me 2 seconds. I'll try and log in here.
So in the meantime, I'm just going to go ahead and make sure that our tax connector is all working, because that is not, I wasn't actually expecting to cover that today, but that's fine. Let's see if we can have a quick look at it.
This would be a great opportunity if anyone has questions to put them in the chat window.
Okay, that looks all right. So one thing that I should mention, QuickBooks Online, especially for QuickBooks Online for US, has two flavors. There's something called an automatic sales tax, AST. If you have AST turned on, QuickBooks will effectively ignore anything that any information that we provide to QuickBooks about taxation. It will effectively ignore it. So in effect, if you have AST turned on, this integration doesn't work, because whatever we tell QuickBooks, it will ignore and it will do its own calculations. So for this to work, you have to have automatic sales tax turned off. What that means is you would typically see this in QuickBooks, where it will prompt you to switch over to the new tax center. If you switch over to the new tax center, then effectively you're turning on automatic sales tax. If you are in the old tax center, then you are not using automatic sales tax. So just to bear that in mind.
Okay, I'm ready to switch screens if you are.
Yep, I am. Go ahead.
Let me know if you can see it.
I can see a screen, yes.
Okay, did you want me to go to that datum invoice, or should I stay here in QuickBooks?
Actually, can you click on taxes, please?
Taxes, yes.
So this interface is the old tax interface. This is not the new taxation service. QuickBooks will keep prompting you now and then, where if you want to upgrade, and if you do click upgrade, you're effectively turning on sales tax. So Samantha, if you click on add edit tax rates and agencies on the right menu,
This?
the last option, yes, that one. This is what you're doing is effectively you're creating the same information that you're creating in our tax group. So go ahead and create new. And let's call it Virginia tax. Well, hold on. Let me see what did I call it. We'll call it the same thing. Just give me 1 second. So I'm gonna paste. I think I've spelled.
Yeah, you missed an I when you originally spelled
Yes,
it.
I did miss an I. I
That's
just
okay.
noticed that. All right. So we call it Virginia Tax 1.
Right. Okay.
And then you can enter a tax agency. Let's say Virginia. Yep, you can select that. That's fine. Go ahead and make that a combined tax rate. Just select combined tax rate at the top.
Oh, got it. Okay. Yep.
Yep. So remember, we entered 2 different rates. We entered a VA county tax and a VA state tax. So you could enter, just say, you know, this doesn't really matter. So let's say VA state. You know, that's fine. Yeah, that's fine. And then this was, I think, a 5%.
Yep.
And then this was, we entered Fairfax County. Yeah, that's fine. Either it doesn't. This one doesn't matter. Yep. And then a 4%. Yeah, 4.5. Sorry. Yeah. Go ahead and save that. The only thing that matters is the tax name. So it should be Virginia Tax 1. Whether it's a single rate or a combined rate, it doesn't matter. Now that you've done this, you are effectively ready to integrate with Work 365. So just hold on a second. I'm going to try and post that invoice, and we'll see this all come through. All right, just bear with me for a second. I'm going to go ahead and locate that invoice for us.
So obviously, when Work 365 automatically generates those invoices, it will automatically apply the taxes. And for partners that have the auto sync checkbox turned on the billing contract, that will also automatically push over that invoice with the taxes calculated on it into QuickBooks.
Correct. So I am just syncing this invoice. Just bear with me for a second. Okay, I've misspelled it and they gave me an error, so I'm just have to correct my spelling mistake here. Just hold on a second.
While you're doing that, I'll show the field on that billing contract that I was referring to.
Okay.
I'm looking at that datum contract we were looking at earlier. So this will be in the same automation section that we referred to earlier. It's this auto sync invoice. When this is set to yes, this is automatically going to sync that invoice that's generated from Work 365 into QuickBooks. And again, the taxes would also be calculated at the same time. There's basically a workflow that runs in order as soon as that job is triggered to generate the invoice itself.
Samantha, if you can go to the QuickBooks section now, we should have the invoice created there.
Okay.
So A datum is the one that we just synced right now.
A datum or datum?
I think it was A datum. A datum is a customer name. The billing contract was called datum. So this is the invoice we just synchronized.
Right. Okay.
So if you just open that.
Up. There we go.
Okay. So what you see here is the Dynamics item is not taxable, whereas the other items are taxable. And if you notice, there was a $41.32 tax calculated on our system, and there is a $41.32 tax calculated on QuickBooks. It selected the same tax rate that we had applied, so this is all set up correctly.
And again, that's because of the mapping between Work 365 and QuickBooks. If there's any data misinformation or errors, it's not going to map correctly and it's not going to calculate the tax.
If it cannot find the same tax rate, it is going to error out, and it's going to tell you that, look, this is I couldn't find the tax rate in QuickBooks that I have, that this invoice is mapped to, and hence I can't sync the invoice. That's what will happen.
Right.
All right. Any questions?
And you also, going back to that account form, billing based on your billing address or shipping address, again, making sure your address information is accurate.
Mm-hmm.
Just wanted to point that out.
No worries.
I think that was everything on my end. I don't see any questions in the chat window. But if anyone has any questions.
So I do have, I think I do see a couple of questions. If this is in the most recent upgrade? Yes. So this is actually a hotfix that was released to 2.5 that was released yesterday. So this is brand new. What is brand new is the is taxable field. So the ability for you to turn off taxation for individual line items. That is the new feature. And this is now available. If you can go into Help and About, you will see for 2.5, you will see a version 2.5 hotfix. Anyone that is upgrading now and downloading a new solution will get this new version. So even if you were on an older version and you are upgrading, you're planning to upgrade today, make sure you download the new solution rather than use an already downloaded solution, because you will get this new version with the hotfix.
I think there was another question. Can the multiple tax setup in GP be integrated into Work 365, or would they have to be set up manually?
We don't have integrations with GP directly, but if you have certain specific use cases that you want to talk about, we'd be more than happy to talk about that. But as of now, we integrate with QuickBooks Online and not GP. All right. So
there actually is one other question. Just to make sure that everything is clear, taxation service in Work 365 is more useful if we intend to connect to ERP and accounting.
Actually, yes, but even if you're not connecting to ERP or accounting, just the fact that you're now able to send your accurate invoice to your customers directly from Work 365 is value add in itself. A lot of our customers are actually doing this. The ability for them to, the feedback that we received was, look, I have a self-service portal. I'm showing the invoice to the customer, but this invoice doesn't have taxes, so it's not really complete. That's really the main driving force behind us doing this. The integration with QuickBooks or other ERP is really an effect of this scenario rather than the cause of it. The cause of it was for us to provide a more end-to-end invoicing experience for our customers. All right. So with that, I think there is one more question. Can this be configured in QuickBooks on-prem instead of Work 365? We don't have integration with QuickBooks on-premise yet, and I will leave it at that. There are some plans and talks around that, but it's very early on, and I don't have any specific dates, or I don't have any information, but there is some planning going on around that, and I'll leave it at that because it's too early to share any more information on that. Okay, so now we covered, I guess, one scenario. I was hoping to cover two scenarios, but we've covered one. But I'm hoping that everyone, this was more useful to everyone. If anyone has a need for scenario 2 or scenario 3, please post a comment, and we'll try and organize another session to cover those scenarios as soon as possible. All right, everyone. Thank you very much for your time, and have a great day. Bye-bye.